The Chicago Fed introducing new labor market indicators this morning that combine private sector data with official labor statistics for a real-time view of hiring, layoffs, and other job information. And join us now, Chicago Fed President Austan Goolsbee. How you doing, Mr. President? It's good to have you on.
We got some new data. I'm excited.
And you know why I like it? Because, say what you will about, the big kerfuffle with the BLS firing and all that stuff. It did highlight that in recent years, it's been hard to collect the data. People just, maybe after the pandemic or whatever, and anything that gives us more data and gives the Fed more to work with to make decisions is a good thing. What do you got?
Look, I totally agree with that. I'm a proud member of the Data Dogs there on the FOMC, and one of the first rules of Data Dogs is sniff everything that hits the floor, and so what the Chicago Fed has done is go get 11 different data sources, private sector, public sector, state level information, and national level information to make these three labor market statistics that we can measure. One is a real-time estimate of what will be the unemployment rate when it comes out eventually. One is the layoff and other separations rate for workers. And one is what's the hiring rate, again in real time, for unemployed workers. And it'll just give you a sense of where we are in the job market. And the statistics that are coming out now show a lot of stability, that we have a kind of a low hiring, low layoff and separations job market, which is unusual, but it looks pretty different than if you were just looking at payroll employment, where you've seen big swings in the aggregate numbers.
I had deja vu, Austan, because you have mentioned some other really good dog analogy about, like, when you're going on a walk, it takes a while because they're sniffing each other. What was
this is a reference, I think.
That's the other
but what was your
There's a
last
time for walking, and there's a time for sniffing, and we need to know the difference.
You've used that before, and this one you said was anything that hits the floor,
Sniff everything.
You're like Dan Rather or something. You're slicker than snot on a doorknob. Because he came up with all these really Texas, I got you. Austin, let me ask you. Maybe you got another dog thing to say. Did you guys move the target, the inflation target? Did you move the goalpost to 3%? Because you're cutting at 3%. People would criticize that.
You know the rules. I'm not allowed to speak for anybody else. But for me, heck no. We did not move the target. The target is 2%. We have to get inflation back to 2%, period. We must get milder inflation numbers looking forward. It's not a monthly 2%. It's over the long run, what's the through line? But anybody saying that we're raising the inflation target, I think that's dangerous talk.
Okay, because I think I might have. I was just asking a question. I wasn't saying you're doing. Are we still? Can you tell me that we're still in restrictive mode, or do we need to wait and see?
If we're still in restrictive mode, or we need to wait and see. I think a little of both. I think we are restrictive, mildly restrictive. It's worth noting, if you hold the rate at some level and inflation creeps up, you're passive cutting. So I don't see that the real rate is as restrictive as it was before we started getting this inflation. But I still think in the period before April 2nd, before we started getting some of these shocks, I thought we were on the rate down. As inflation comes down to 2%, we could still go down a fair amount with the rate. What's neutral, I think, is below where we are now by 100, 125 basis points, something like that.
Were you asking him about another dog thing, or what? I thought you wanted to ask him something.
No, it was dog.
It was a dog, because I like, I got 3 of them, and one of them is, 3 months old. It's a nightmare German Shepherd. But, and actually, when Glenn said that about a teenager every day growing, the dog, I just wish it's housebroken. I don't know what, I keep trying to show him. Austan.
Here's how you do it.
Yeah, he doesn't have thumbs, though. You know he can't flush.
Joe's neighbors are upset when he goes out to try to demonstrate for the dog.
It's like,
yeah, there's a visual.
That's a visual that you can't.
Thank you, Austin.
Did you ever think you might say, I wish we did 50? Was there any thought in your mind that you could have been one of them?
Not right now. No, I'm still. I'm okay with moving to be in a better spot, and I think eventually, at a gradual pace, rates can come down a fair amount if we can get this stagflationary dust out of the air. But with inflation having been over the target for 4.5 years in a row and rising, I think we need to be a little careful with getting overly upfront aggressive.
Hey, Austin, that kind of brings to mind a question I've been kicking around since yesterday when Stephen Myron spoke at the New York Economic Club, or the Economic Club in New York. He said that he would dissent in the future, too, just like he did this time. That tells me that he kind of read the room and his opinion is nowhere near where the rest of the voters are. Is that a safe assumption?
Well, again, I'm not allowed to opine about what other people on the committee think or what the committee thinks as a whole. For me, I think the neutral rate of interest is somewhere below where we are right now. And if we're on path to get inflation back down to where it's supposed to be and where we promise we're going to bring it, I think rates can come down some. If you look at the dot plot where everybody gives an opinion of where do they think rates are going to settle, there's a big mass of almost everyone on the committee saying that rates can go down something, as I say, that ultimately the rate might settle around 3% with inflation at 2%. And I'm comfortable with that as a marker.
Hey, Austin, I've got a different question for you. For a long time, folks in your position and others have talked about the independence of the Fed and suggested that if the independence of the Fed were put into question, the bond market would react, that the stock market would react, that it would have a demonstrably deleterious effect. Why has that not happened?
Deleterious. I like what you did there.
Why has that not happened?
Alliteration.
I don't know. You definitely don't want to get in the head of it's forbidden to try to get in the head of the other members of the FOMC, and it's very difficult to get into the head of all the time of the market. But I will say I absolutely believe that if you look at other countries or if you look at times in the United States when there is not monetary independence from political interference when setting the interest rate, inflation comes back, the unemployment rate is worse, job growth and economic growth are worse. So I think it's critically important that we maintain monetary independence. Maybe the market believes that ultimately there will remain monetary independence, that nobody would go mess with a good thing that we have had. Or maybe they think that conditions are going to make clear that the people calling the shots are the FOMC and not anyone else.
Yeah. Rarely does, the worst case scenario ever come to pass. A lot of hand wringing. I mean, we're in the media, so we got to do these things. But how about, what was I going to, we just had a couple of people, Jim Bullard, who you know, and later Mike.
Of mine.
Yeah, and later Mike Wilson on saying that we're going to reaccelerate, that we're past the low point in labor and economic activity. Is that possible? And why would we be cutting them? But then he said Mike Wilson said we still need to cut to make sure we get a real recovery. But the low point is already passed.
It's possible. I will say, if you look at these new Chicago Fed labor market indicators, they don't totally suggest that. So the labor market continues to cool at a sort of a mild to modest pace. If you look at the aggregate jobs numbers, they've turned decidedly sour compared with where they were, say, a year ago. But my caution on just looking at that, of course, is that the supply side is moving all around with immigration and some other things. So it is possible. And one of the things that we compute in the Chicago Fed labor market indicators is what's the probability of movement of a various size in the unemployment rate. There is the possibility that the unemployment rate goes down. It's a little lower probability than it stays the same or rises for the coming month. You got to manage the risk. And so I think to the extent that Bullard or others are highlighting that the economy doesn't have to just deteriorate, it could be getting hotter. And if it got hotter and inflation's already been above the target for almost 5 years, you would need to think about that.
Right. You know, Austin, all politics are local. They always say, and I live in New Jersey, thank God. But in New York, we talk about the possible next mayor a lot, Mamdani. And, you know, as a trained economist, I don't know if you have any viewpoint. This guy is very charismatic. I don't know what kind of political future he has, but maybe you could just weigh in. Maybe he'll be president someday. And you served in one socialist administration. Would you serve in another socialist?
Hey, no, look, Joe, you know that when you become a sworn member of the Federal Reserve, you're out of the elections business.
Oh, my God. You can't even talk about the mayor.
Get off my lawn nature in politics.
Never
now I could just be a consumer of it.
Well, okay. Can you talk about, you don't want to talk about Mamdani at all? You're not going to endorse him.
No, of course not. What is that? That's not the Fed. Look, the Fed's job by law
I know,
is
but we're all we're all grappling in New York. This is, you know, the financial capital of the world. It still is, and it's just a very strange juxtaposition. Is there any way out of this, Sorkin? At this point, there's no way out of it. It's like 90%, Austin, and we're going to be dealing with it probably. Are we not? Is it 90%?
At the moment, if you believe the betting markets, you look at the polls, he looks like he is going to be the mayor of New York City. I
mean, Austin, it could get so bad that the Fed might have to do something because New York is that important.
We got a job.
You got to cut rates for what's happening in New York.
Cut rates for New York. We stabilize the prices, maximize employment. If anything's affecting prices or jobs, then we got to think about it. Other than that, you got your own problems. If you want to move out here to Chicago, we got plenty of space. Real estate
I thought you were going to say we got plenty of problems there, too. You're right. You do. All right.
Just thought of the new headline for that. Fed to New York, drop dead.
Yeah, Fed to New York. Yeah, Fed to New York, drop dead. Goolsbee to New York.
Fed to New York. You don't get your own interest rate.
Yeah, okay. We might. I don't know. All bets are off. Thank you, Austan Goolsbee. Mr. President.
Great to see you guys again.